All right, SPX day trade plan review, July 24th. So we're going to take our resistance level 74.33, which was this high right here. And we're going to take our fib tool and we're going to snap it down to support 73.99. So you can see 73.99, significant low right here. There's our range. And then just for context, just show you where I got my targets for my lower end here. All right, so just grab my arrow tool here. All right, so scenarios long above 74.33, target 74.49 to 74.54. Here's 74.54. Here is 74.49. So previous New York Open was kind of the first target above this resistance zone, and then my second. This is pretty much a little range here. Obviously, you can take profit on longs once you start hitting here, and then this is the upper side. And really, it's pretty clean action. The New York Open after 10:30, 10:45, breaks back up above our resistance. So pretty choppy in the morning. 9:30 to 10:30, 10:45. Never a bad idea to wait for some of the chess pieces to fall, if you will. And obviously, this is pretty clean on a 15-minute chart. Sometimes if you can just weather the storm and be a little patient, you'll see that institutions will bring the price in one direction. Institutions, smart money, wants to get the best price, and the best way to do that is to shake out the unsuspecting. So 15-minute chart, a little bit clearer. If we look at the 5-minute here, um, pretty choppy action. Still, there is actionable trades. For me, the mentality is, if you're trying to trade the plan, always risk one to make two at the very least, and break your trades up into different times of the day. So there's a 5-minute opening range break, there's a 15-minute opening range, there's a 30-minute. There's no right answer. There's many different ways to make money in this market. However, that is, and whatever strategy suits you best, run with it. But basically opening print. Other things are helpful to kind of determine momentum, obviously, and to have confluence. So one of the traditional ways, and a way that I think is used among lots of traders, and I think is pretty simple to understand, is the MACD. When the MACD is positive, you can buy dips, and you want to go in the direction that's in confluence with the MACD action. And once it starts to turn, It can be used as a reversal signal, you know, but you want to use, key levels. So a lot of times, um, I'll look for a reversal, and then I'll look for MACD to cross back down, and then basically you can fade the target area here. So all the areas from the plan can be used, you know, throughout the course of the day. So once you break above, once you break below, let's say our pivot of 74.15, you can trade that down to support. Perfect trade here in the first 15 minutes of the day. This is something that I did take um, using, I think I was trading ES, a nice 10-point move down to support. And me personally, I like to get into the trade. And if I'm getting into in an opening, pivot rejection down to support, I'm trying to get out, on big red candles down to support, and ideally before 10 a.m. And then kind of reposition my thinking. So it's never a bad idea to use the simple mantra of buy at support and sell at resistance. So let's say you were using our pivot here as resistance. You're selling down into support. You're buying support. You're going long. MACD lines up with it, let's just say, and you're longing back up into the pivot area. If you're still bearish, you want to take it back down to the support. No problem. I'm not going long until I recover our pivot. In this scenario, I did go long after we recovered our pivot and um, the highs from the opening. We'll say 45 minutes here because it looks like this is a trap in the morning here. And I'm also using Confluence on off of some of these fibs here. So if we get a pump up into the 786 level, and we get some wicks off of that level there, and MACD is negative, I'm more confident trading this back to the downside. If we break back up above our pivot and we reclaim the 618 level and we reclaim the 786 level, now I'm looking at this as failed breakdown, and I can take this either recovery of the pivot retest, and then obviously up to resistance, or there's another trade here if you simply want to wait until we break above our resistance, and we're taking that into our obviously previous day's high, New York AM session high here, and then ultimately the 1618 level. That's the basis for most of my plans. I'm just looking at previous swing highs or swing lows, and then the extension of whatever my my worthy range that I've deemed worthy of my trade plan, um, the range. So, there's lots of ways to skin a cat, as they say. If you're, you know, if you're bearish on the market, and again, let's bring the MACD back up here, and you want to fade, you're saying to yourself, all right, well, I'm going to fade the 1618 level, no problem. You get some price action, you get a fair value gap. This is a great area here. You have bearish MACD cross back down. You're going to short this right back to your resistance level. We do break down from that and then kind of bounce back up here. But, MACD is still negative. So, let's say you want to take the breakdown, failed breakout, we can call this here, and then trade that right back down to our pivot. And your pivot is your line in the sand. Again, break down below the pivot and into support. There's probably I would say 4 or 5 really good setups from Friday's action. You don't have to trade them all. You just have to, trade whatever resonates with you. Get a little piece of the action, move on, rinse and repeat. Do it all over again the next day or the next week. So that's the wrap up from this review.